Over the past few decades, China has gotten really rich. Of course, such a massive populace with constantly growing wallets need a state-of-the-art financial infrastructure to handle all of their day-to-day needs. Here is where Ant Financial enters the stage. Born out of Alibaba's Alipay, it provides a vast number of high-tech financial services to over 1.2 billion users in China and beyond, and has allowed China to establish itself as a dominant player in the world of online transactions and FinTech. At a valuation of $150 billion, the Ant Group is currently the most valuable unicorn company in the world, or at least was until a few weeks ago. Their now infamously suspended IPO was to be the biggest in history and would have brought their valuation to $330 billion, more than any bank in the world. But their party was cancelled due to conflicts of interest with the Chinese Communist Party. So how did this once Alibaba subsidiary grow to become so big? How did they manage to revolutionize finance within a few short years? What went wrong in what could have been history's largest initial public offering? And of course, what's next for Ant Financial and Chinese financial technologies as a whole? Would China be able to use their advanced technologies to create a financial sphere of influence that would rival the power of the United States and the dollar? And what will this mean for the future of finance worldwide? The dawn of a FinTech revolution. If the banks don't change, we'll change the banks. Jack Ma, founder of Alibaba, 2008. From its founding in 1999, Alibaba was set to connect China to the world and build an online Chinese market that would overshadow all competition. Indeed, within a few years, they pushed out all domestic and international rivals and took control of the ever-expanding Chinese e-commerce market. But by the mid-2000s, there was still a massive roadblock on the way of the industry in reaching explosive growth. At the time, the Chinese market suffered from a lack of trust between merchants and customers. An outdated financial infrastructure that couldn't keep up with the pace of e-commerce meant that buyers, sellers, and Alibaba employees had to manually process payments. In 2004, as a response to this potentially fatal bottleneck, Alipay was born, a service that would soon devour the Chinese financial market and change FinTech forever. Initially, Alipay acted as a guarantee for the sellers that their money will be safely transferred through Alibaba. Later, by enabling online transactions, they were able to bypass the slow and bureaucratic system of Chinese banks and process payments directly through Alibaba. From the start, the growth of Alipay was spectacular. And thanks to constant innovation and the exponential growth of Alibaba, the service quickly became the dominant player in Chinese payments. In 2011, Alipay, now a payments conglomerate, separated from Alibaba due to regulatory concerns. It was transformed into the Ant Financial Group in 2014, providing a huge array of services, including loans and credit, insurance, wealth management, and more. Within 3 years of Ant Financial's founding, they had over 520 million annual active users. A true financial star was ready to explode. A financial supernova. To the dismay of thieves and robbers, cash no longer exists in most of China. Quite literally, most shops and restaurants, especially in major cities, will not accept your cash, nor will they accept a credit card. Almost all transactions are conducted online using QR codes. China's third-party online payments industry was born thanks to two companies. At the helm stands Ant Financial. With a market share of 54%, it transferred $16 trillion last year, which is 25 times more than PayPal, the biggest online payment service outside China, and is only rivaled by the other side of this duopoly, Tencent, with a market share of 37%. But mobile payments are only one portion of the pie for Ant. They offer a world of financial services to their 1.2 billion customers, all in one super app. Their goal from the start was to be embedded into every aspect of their users' financial life. Ant Financial positioned themselves as a techfin company instead of a fintech. Even as a separate legal entity, Ant Financial is very much integrated into the Alibaba ecosystem in a complementary partnership. They really take advantage of the rich data and technologies at their disposal to create revolutionary financial services that provide financial inclusion for everyone. All our innovation started with one key point: to be customer-centric and to solve problems for the customer. Eric Ying, CEO of Ant Financial. For Ant, it's not about providing financial services. It's about reimagining finance through technology and bringing finance into the real world. It's about making customers forget that they're even using a financial service. It's just part of their lives. Other than payments, some of the most valuable services provided by Ant Financial are loans and microfinancing to individuals and small and medium businesses in an insanely quick fashion. Small and medium businesses that have always been at the core of Alibaba's focus can now take more risks, innovate, and sell more products through Alibaba and grow quickly. Huibi, Ant Financial's credit card service, uses the customer's historical financial data to calculate and provide credit, which can be used when shopping within the Alibaba ecosystem. The credit comes with no interest for the first few weeks, and each customer's data is used to make loans cheaper and quicker for everyone. The Ant Group has also brought financial inclusion to wealth management. Yuebao, their money market fund, was at some point the world's largest money market fund with $288 billion of assets under management. It's allowed a significant portion of China's population to put their pocket money to work and earn interest on it, with no minimum investment and instant withdrawal at any time. Yuebao is only one of the many wealth management products available through Zhao Caibao, Ant Financial's pioneering web-based investment and wealth management service. Its aim is to provide financial services that were typically designed for the wealthy to the general population. In the insurance industry, through a partnership with Ping An, China's biggest insurance company, and Tencent, another Chinese internet giant, the Ant Group has helped establish ZhongAn, the world's most innovative all-online insurance service. In its first year, ZhongAn underwrote 630 million policies for over 150 million customers. The Ant Group also has its insurance platform Leibao, which connects over 100 insurance players to millions of customers, mainly small and medium businesses, operating within the Alibaba ecosystem. The list of Ant Financial's offerings and services grow larger every day, and have already started expanding internationally, mainly in Southeast Asia, where they have over 300 million users. But no matter how big the Ant gets, the goal never changes. They're primarily a tech company. All Ant services leverage big data and technologies available through the Alibaba ecosystem to create scalable and reliable financial infrastructure for a massive but underserved market. Trouble in paradise with Chinese characteristics. Up until a few weeks ago, there was no stopping Ant Financial's expansion. Their IPO was meant to raise around $40 billion and render Ant into the world's biggest financial institution. This was until, on October 24th, Jack Ma, Ant Financial's founder, decided to criticize the Communist Party's red tape and overregulation in the financial sector, blaming them for hindering innovation. 10 days later, and just 48 hours before the biggest IPO in history, Chinese regulators suspended the whole thing, accusing the company of filing improper paperwork, as well as the violation of new online lending rules. Once these new rules get implemented, Ant Financial, which currently delegates 98% of its online loans as assets in other companies, will have to directly fund at least 30% of those loans, which will completely break its lean and low capital business model. Other regulations may soon be passed that would disable or weaken a large portion of Ant Financial services, as well as making it harder for the firm to partner up with other financial institutions. The deeper cause of such a regulation, aimed directly at Ant Financial, was probably a larger conflict of interest with the Communist Party, which doesn't like too much power outside its direct control, along with concerns over the too-big-to-fail state of Ant Financial itself and the threats that would pose to China's economy as a whole. Regardless of the reasoning, such an erratic move was a big risk for the Communist Party. Not only are they hurting a domestic powerhouse, they're creating an uncertain environment for all other Chinese entrepreneurs, which could do a lot of harm to the country's economy in the long term. Whatever beef Jack Ma and the Ant Group have with the CCP, it's costing them and the entire industry a lot of money and opportunities. An uncertain future for the giant ant. Regardless of how gloomy things have gotten, the game is not over yet. Once the behind-the-curtain deals are over and the CCP gets what they want from the Ant Group, even the sky won't be a limit for expansion. So what's next? On the innovation side, Ant Financial needs to keep going at full speed and further develop their current experiments. For example, one of their most promising services is their blockchain infrastructure, AntChain, which allows them to develop services in supply chain management, agriculture technologies, and more. Of course, Ant Financial faces ever tougher competition in China, mainly from Tencent, which, in addition to constantly launching alternative services to Ant Financial, enjoys an insane amount of loyalty thanks to the integration of those services into WeChat, China's biggest messaging app. In fact, while 24% of users said they only use WeChat Pay and no other service, just 4% of users only use Ant Financial services. Threats are also rising from JD.com, Alibaba's biggest e-commerce competitor, and Baidu, another tech giant. Domestic competition is why it's strategically important for the Ant to look outside its colony. Ant Financial needs a few permanent bases abroad. In America, they were about to finalize the $1.2 billion acquisition of MoneyGram until the Trump administration spoiled their party. Even with Biden in the White House, it's unlikely that US-China relations will go back to the pre-Trump era, but one way or another, the Ant needs a colony in America. In the meantime, Europe's growing fintech industry is still behind China's. Acquiring a few fintech companies in the EU and the UK, like Revolut or TransferWise, and integrating them into the Ant ecosystem wouldn't be a bad idea. But no matter what, there's only so far they can go in the already extensive financial world of the West. Looking at the bigger picture, the best path forward for Ant Financial and other Chinese fintechs is one that happens to serve the strategic interests of the Communist Party too. China should use their tech to create a Chinese financial sphere of influence that could compete and overtake the American one. This will allow China to weaken the leverage that the US dollar has as reserve currency, further opening a path for a Chinese-mandated world order. By expanding into sub-Saharan Africa, parts of South America and Southeast Asia, where most people are underbanked and China yields high amounts of influence, they could slowly start to develop this alternative financial sphere of influence. By using their leverage and influence in Iran and its allies, currently disconnected from the global financial system due to American-led sanctions, China and Ant Financial could even develop back channels that enable financial transactions with America's fiercest enemies. This alone would be a huge blow to the power and reputation of the US dollar and the strength of American sanctions. Over time, once this hypothetical new financial sphere comes to fruition, the RMB could indeed become the reserve currency, but it would be much smarter for China and Ant Financial to create an international, stable cryptocurrency backed partially by the RMB and partially by other currencies and assets. This will truly set the stage for the dragon to spread its wings across the whole planet.
Ant Financial has clearly come a long way in revolutionizing a financial world through technology. If they can get past their current troubles, there is no stopping Ant Financial, and as a result, there is no stopping China's influence over the financial world. Either way, if you liked the video, please subscribe so you can catch the next one, and if you think I deserve it, please support my little project on Patreon so that I can build a little financial backing, potentially hire an editor, and upload videos much more frequently. Thank you. See you next time.